Hey everyone, welcome back to Corporate Decoder, the place where we look at company reports so you don't have to. And let me tell you, Gladstone Capital has been busy turning up the dial on their financial instruments. Today we're diving into their latest 8K filing, a peek under the hood at some significant financial moves they've made. Think of this as them issuing some new paperwork for their money operations. Gladstone Capital is a company that deals in investment and finance. Right now, they're telling us about some big decisions they've made concerning their debt and how they plan to manage it. It's like they're adjusting their financial engine to keep things running smoothly. The main event here is Gladstone Capital issuing new notes. These are basically loans that the company takes out and they promise to pay them back with interest. What makes this interesting is the type of notes they've issued. They're convertible notes. This means that in the future, the people who bought these notes might be able to swap them out for shares of Gladstone Capital stock. It's like giving someone the option to become a part owner of the company later on. So on September 9th, 2025, they entered into an agreement to sell a significant amount of these convertible notes, totaling almost $150 million. This is a big deal. They even included an option for the buyers to purchase even more notes if they wanted to for an extra $19.5 million, which they fully exercised. This offering officially closed a few days later on September 12th. These notes are set to mature in October of 2030. That's a 5-year period. The interest rate on these notes is 5.875% per year, and they'll be paying that interest out twice a year on April 1st and October 1st, starting in April of 2026. Now for the convertible part, if you hold one of these notes, you have the option to convert it into shares of Gladstone Capital's common stock. The initial conversion rate is set at about 38.44 shares of stock for every $1,000 of the note's value. This means at the start, one share of their stock is valued at around $26.02. This conversion rate can change though, depending on certain events with the company. Gladstone Capital can't just decide to buy back these notes whenever they want. They have to wait until October 2028 before they can even think about redeeming them. After that date, they can buy them back early if the company's stock price goes up significantly. Specifically, if it has been at least 13 bidding, specifically if it has been at least 13. If they do redeem them, they'll pay back the face value of the note plus any interest that's due up to that point. And what if something big, a fundamental change, as they call it, happens to the company? Well, in that case, the people who hold these notes have the right to demand that Gladstone Capital buy back their notes. They'll get back all the money they put in plus any interest owed. Let's talk about where these new notes stand compared to other debts Gladstone Capital already has. These new 5.875% notes are considered unsecured. This means they aren't backed by any specific company assets. They rank equally with other unsecured debts, like their existing 5.125% notes due 2026, and their 7.745% notes due 2026, and their 7.75% notes due 2026, and their 7.75% notes due 2026, and their 7.745% notes due 2026. And their 7.75% notes due 2026, and their 7.75% notes due 2026, and their 7.75% notes due 2026, and their 7.75% notes due 2028. They're also higher up than any preferred stock the company might issue and are subordinate to any future debt that's specifically ranked below them. However, and this is important, these notes are a step lower in priority than any debt that is secured by company assets. Also, crucially, they are structurally subordinated to all the debts and other obligations of any of Gladstone Capital's subsidiaries. This means that if a subsidiary runs into trouble, the creditors of that subsidiary get paid back before the holders of these notes. The company has also agreed to certain rules or covenants related to these notes. These include following specific legal requirements related to the Investment Company Act of 1940, which is essentially a law that governs companies like Gladstone that invest in other companies. They also have to provide financial updates to the trustee, which is a bank that oversees the terms of the debt. Here's where the money goes. Gladstone Capital estimates they get about $142.3 million in net proceeds after all the fees and expenses. What are they going to do with this cash? They plan to use it to pay down some of their existing debt under their credit facility and for general company operations, a pretty standard use of funds. But here's a strategic move. They also mention they plan to borrow more money under their credit facility, specifically to pay off some of their older notes, including their 2026 and 2028 notes. This suggests they're actively managing their debt, perhaps refinancing at a lower interest rate or altering their debt maturity schedule. And this report includes legal opinions from their lawyers, Kirkland and Ellis and Venable LE, which basically means their legal teams have reviewed everything and given their stamp of approval on the legality of these transactions. Now, my take on this, Gladstone Capital is making a pretty strategic play here. They're issuing new debt at a lower interest rate of 5.875% compared to some of their existing debt, like the 7.5% notes due 2028. This can help reduce their interest expenses over time, freeing up more cash for them to operate or reinvest. The convertible feature is interesting too. It's a way to potentially raise equity capital in the future if their stock performs well without diluting current shareholders too much. Initially, however, there's always a flip side. The fact that they are planning to reborrow to redeem older debt might signal they're keen on managing their debt structure proactively. While refinancing can be good, it also means they're constantly taking on new obligations. We need to see how this new debt fits into their overall financial picture, and if they can comfortably service it, especially given that these notes are unsecured and subordinate to other borrowings at the subsidiary level. This subordination is a key risk to keep an eye on, as it means in a worst case scenario, holders of these notes are further down the line for repayment. Overall, Gladstone Capital seems to be actively managing its financial health and capital structure. They're using a common but smart strategy of refinancing debt to reduce costs and potentially tap into equity markets later. The key for investors will be to watch their ability to meet these new obligations and how their overall business performance supports the value of their stock, which is critical for the convertible notes to be attractive. Alright, that's our breakdown of Gladstone Capital's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And don't forget to check out our Discord community, linked in the description below for more insights and discussions. Thanks for watching. See you next time.